focus on pharma. India's drug regulator, the Cdsco, has cleared the way for Novo Nordisk blockbuster diabetes drug Ozempic, best known globally for its off-label use in weight loss. The long-awaited approval opens doors for one of the world's fastest-growing pharma markets, India. Ozempic joins its fiercest global competitor, Munjaro, which was given approval back in March. Let's go across to Neetu Chandra for more on this. Neetu, take us through all the details. When did the approval come in? What does it mean?
Yeah, Abha, so the India's drug regulator has approved this Ozempic. It happened on Friday, so the Cdsco came up with a notification that they have approved this drug strictly for diabetes. So understanding it scientifically, Ozempic belongs to the GLP-1 receptor agonist class, so which improves blood sugar control, and it is also linked with significant weight loss benefits. So however, in India, the approval is strictly for diabetes management, and globally, Ozempic has gained huge visibility because of its off-label use, as you mentioned, for the weight reduction. So which is why it is often in short supply in the other markets. So for Novo Nordisk, this approval is very it's significant because it already markets Wegovy in India for obesity. However, this is for, I would again repeat myself, this is again for diabetes, type 2 diabetes. So while the company already markets Wegovy in India for obesity, and now with the Ozempic entering, the company is strengthening its portfolio across both diabetes and obesity. However, more clinical trials are on the way, and this approval is expected to intensify the competition in the fast-growing GLP segment in India, because Eli Lilly is already there. It launched this GLP-1 and the GIP receptor agonist. It's both for diabetes and obesity in India in March 2025. So this is intensifying competition for the company. And, the company has not given any timeline for the launch of this drug, but certainly we have spoken to the management, and they are very hopeful that this will also capture the market in India, because India has a growing diabetes as well as obesity burden, since it is also being used in the West for weight loss. So the company is highly hopeful that it will gain market in the Indian region as well.
All right, thank you for that, Neetu. Let's go back to seeing how we're doing in opening trade, and it looks like some pain perhaps felt on HUL share. Let me come to you on that. Top loser on the F&O side. While we are looking at other consumption bets, some of the FMCG majors are still looking a little quiet. Perhaps at the more mass end of consumption, things are still to move.
Absolutely, Abha. And it's really disappointing if you look at the chart of Hindustan Unilever. In this kind of an environment where GST cuts have come in, you see the stock below 200-day DMA, below 365-day DMA. It was at 2753 on 4th of September. And what you see now is 2455. It's a massive correction that's come in. Let's hope that this major moving average holds as far as markets are concerned, and that the monthly close is fairly sensible on the monthly charts. But weakness on Hindustan Unilever, top F&O loser, top Nifty loser, 2.5% lower. Scattered market, but telecom is doing pretty well. Remember, just last week, Prime Minister Narendra Modi had actually inaugurated a BSNL setup for 4G connectivity. So HFCL is doing good. Tejas Networks is doing good. These are telecom product providers as far as markets are concerned. And of course, there's no stopping BEL, Abha.
BEL continues to move. But I actually want to get Dhananjay's take on some of the Q-commerce companies, simply because it's festive, Dhananjay, and a lot of them are just riding on pure momentum there. Even though we're still waiting for numbers to pick up, they've been a little sluggish, as per recent trends, but the market's definitely counting on festive momentum. What's your take when it comes to that pocket of the market?
So I think, the thing is, as far as the consumer staple companies are concerned, I think it will take some time for them to really, adjust the entire price, correction that needs to happen. And as a result of that, the volume response will be more back-ended. So I think the commentary from HUL has been on the conservative side. They are basically talking about sort of a sort of unchanged performance compared to last quarter in the second quarter. I think that sort of sets up a sort of a background for rest of the FMCG pack. So I think initially the market had been expecting a significant upsurge. I think that expectation has moderated. I think the price elasticity is also much lesser for staple companies if you look at the volume growth. So I think the FMCG pack might actually be a late participant in this rally. I would say discretionary spending, such as auto and all, can respond much better. So I think that is
Okay.
what the thing is panning out. Yeah.
All right. And in fact, I just want to pull up names like a Zomato, for instance, and just take a look, because on the quick commerce side, we're actually seeing a lot of momentum ahead of festive season, and also on auto specifically, apart from the fact that we're awaiting those monthly numbers. Let's pull up Tata Motors for you, because on the news buzz and the loan from the British government there, that particular one is also moving well and has been, in fact, the last few sessions as well. So keep an eye on Tata Motors.